naturally, given all the products that are built in DeFi are all built through Ethereum and EVM and the ecosystem there, we wanted to naturally segue into that. And today we've released Ethereum-backed loans as a second collateral asset that users can borrow against. And we've seen increasing demand from our customers asking us, when can I borrow against my ETH? Like, when will you support ETH so I can actually get more liquidity? And even our users who've been borrowing against Bitcoin have requested the same so they can continue to access more liquidity from their assets.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features Coinbase's newly unveiled product for ETH-backed loans. One theme we've been very excited to cover on the Edge Podcast centers around this DeFi mullet-based product. It's the idea that we can have access to the best DeFi-powered products through the lens of an exchange. Coinbase has been a trailblazer in this regard. And so over the past year, we have been able to watch the growth of BTC-backed loans through cbBTC-backed loans on Base. That product has grown to over $1 billion in loan originations. Now we are learning that Coinbase has finally made available ETH-backed loans.
So I think what this really taps into is just the ability to stay long an asset you're bullish on and borrow against it. People have been doing this for many years with their homes. For many people, their home is their biggest asset and they want to borrow against that asset rather than have to sell their home. So what Coinbase is offering is just that ability. Don't sell your Bitcoin, don't sell your ETH, but borrow against it. And we talk about this kind of at length, like what this unlocks. And the parallels to people have been doing this in DeFi land for a long time, but it's just way more accessible for the mass market in this new kind of delivery form factor through Coinbase.
When you consider all of the different use cases in DeFi, borrowing and lending have been, if not the most popular use case, one of the top use cases. The ability to be able to borrow against an asset like ETH is huge. It's a huge unlock. And it's something that, although you and I have benefited from this since, Aave launched and MakerDAO and other borrowing platforms like Morpho, I've struggled to explain how to take full advantage of that, to my friends who would hold any sort of crypto on an exchange. So now we have the top two digital assets in the world, both Bitcoin and ETH, as acceptable collaterals to be able to borrow against, but without all of the barriers that, normally required someone to set up a wallet and be able to transfer their assets from the exchange to that wallet and be able to know how to pay for gas and to know how to manage their private keys. They've abstracted all of that away, and we're just excited to see this made available to more people.
We also talk about where all this is going with Coinbase and what Coinbase is going to look like in the next 5 to 10 years, this financial super app, this hub where you'll be able to do all of your financial dealings, in crypto and just in your regular life as well, all under the hood via Coinbase. So yeah, we dissect that idea a little bit as well.
So before we get started, just a quick reminder, you can subscribe at the-edge.xyz. That's the best place to subscribe to the Edge newsletter and to get real-time notifications for the Edge podcast anytime we release a new episode. You can also check out our link tree at edge_pod. That's the best place to subscribe to the Edge podcast on Spotify, Apple Podcasts, or YouTube. And then one last shout out to all of our sponsors that make the Edge podcast and the Edge newsletter possible. Sponsors like TOROS Finance and REDSTONE. Otherwise, we hope you enjoy the episode. Grow wealth exponentially. With TOROS leveraged tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With TOROS, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. TOROS reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. TOROS Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge Podcast and Edge Newsletter. Banks use your money to line the pockets of shareholders. Meanwhile, Solstice uses the same yield strategies to line your pockets. Introducing Yield Vault, Solana's best yield. A live delta neutral strategy with positive returns month over month for 3 years. Built for internet capital markets and powered by the stablecoin USX. To learn more, go to solstice.finance. NEUTRL is the next generation of crypto-native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta-neutral strategies to deliver premium, stable returns without taking market direction risk. NEUTRL is currently live in private beta and will be opening for public deposits soon. Learn more at neutral.fi. All right, let's introduce Sid Ramesh, product lead for crypto-backed loans at Coinbase. Sid, welcome to the Edge Podcast. How are you doing?
Thank you, DeFi Dad. Been a long-time fan of your work. I know we've chatted a long time, and thanks for having me. Really excited to dive into a number of different topics.
Let's talk about the meme, the DeFi mullet. What does it mean? How does it describe the types of products that Coinbase is developing?
DeFi mullet, in a nutshell, is effectively a trusted, easy-to-use front end, which we all love and use today at Coinbase. And behind the scenes, it leverages DeFi and on-chain primitives to power the activity that you get on Coinbase. So you get all the benefits of a centralized surface that you can use day-to-day, like your app or website. And then behind the scenes, the complexity is actually living on the DeFi on-chain smart contracts. So actually, the reason it's a mullet is because you have a very easy-to-use interface in the front end, and then you have the DeFi complexity in the back end.
You got the business in the front and the party in the back. So is it fair to say, though, that this DeFi mullet, movement is becoming a core strategy within Coinbase? Is this something you're really leaning into on the future roadmap trajectory?
Yeah, it's interesting because Coinbase was always built on trusted, centralized custodial infrastructure. And as we see all the innovations, great things being built on chain across a number of different blockchains, Base, we almost see the future of financial services moving on chain. And we see the benefits of faster, cheaper, and more safer and global financial services that are being built, uniquely enabled by different protocols, different primitives. And we see the future where parts of Coinbase's financial services and features will start to increasingly move more on-chain, while we still have the benefits and simple user experience and trusted on-ramps for users to access DeFi in a safe and trusted manner. So we'll start to see more on-chain innovations be integrated into the Coinbase app. But so far, we've done the borrowing and lending and our DEX trading as well.
When DeFi was just beginning to ramp up in terms of adoption, I was thinking Coinbase and many other exchanges would see this as, an attack on their business model. But Coinbase has leaned into this and really thought, I guess, how can we provide all of these opportunities on chain, but through the lens, again, of the Coinbase customer. So talk to us about some of the examples that are already live. I think one that we are all fairly familiar with is Bitcoin-backed loans. How does that product work?
Yeah, for sure. So Bitcoin-backed loans is our first DeFi mullet offering that we shipped earlier this year. in a nutshell, when a user actually opens the Coinbase retail app and they have Bitcoin in their account, they're able to effectively get a loan in a few clicks. And when they do actually submit a loan, what's happening behind the scenes is that every user has an embedded smart contract wallet attached to their account, which is effectively their self-custodial wallet where a user can actually get a loan on-chain. So the Bitcoin that exists in their Coinbase account gets wrapped into Coinbase Wrapped Bitcoin or cbBTC, effectively being used as collateral on a protocol called Morpho. So we've integrated Morpho as our first protocol where you can actually get the loan on chain. So what's happening is the Bitcoin gets wrapped in the cbBTC that gets sent to the Morpho smart contracts, and then the USDC that's being dispersed by Morpho comes back seamlessly into the user's Coinbase account. And this is all possible today because we built foundational technology that integrates smart contract wallets, smart contract platforms with respect to actually bundling transactions. We have the base blockchain. So effectively, you can think of it as like a vertical integration that we've done at different parts of the stack. And the user effectively gets all the benefits of DeFi in a very seamless manner that they don't have to actually think about the complexity of clicking different interfaces or connecting a wallet or remembering a seed phrase. It's all done by the matter of fact that they can stay within the Coinbase app and then not have to deal with any complexity outside of Coinbase.
I want to call out that obviously this conversation is focused on DeFi-backed loans or DeFi-powered loans, but what you're enabling with just cbBTC, that is a reserve asset. It's a collateral that someone can hold on chain. In this case, it's on Base, it's on Arbitrum, it's on Ethereum. But what we're getting through the Coinbase app is we're getting the opportunity to hold exposure to cbBTC. So we've got exposure to the price of Bitcoin ultimately, but then we're also able to then borrow against that. Are there other use cases that you're excited about beyond using that for loans? Like that is just an enormous market. I think that's the biggest market. You might have had a tweet about this, that is the largest use case out there. But yeah, anything else that is top of mind in terms of use cases beyond these loans?
Yeah, when I was part of the founding team of cbBTC, we had a number of different use cases in mind. The thing with pure native Bitcoin is that I would say it's harder to program financial services outside of the pure Bitcoin transactional activity. So when we actually thought about what are the different ways in which we can enable utility for our clients, we decided a best way to go about this is to actually have a one-to-one wrapper around Coinbase, Bitcoin, right? Specifically, what's happening is that in reserve, we have one Bitcoin, and each Bitcoin is actually represented as a token on the different blockchains we support. So for instance, if you have one cbBTC on Base, that is effectively backed by one whole Bitcoin in the Coinbase custodial exchange. So we also have proof of reserves behind it too, so you can actually look at the actual on-chain reserves that Coinbase holds for all of these wrapped assets that are circulating. So when we created cbBTC, one of the main use cases, of course, was to support borrowing. The other side of the transaction is actually lending. So imagine you can actually get yield on your Bitcoin through different primitives and platforms within Base or other ecosystems. And then the third aspect could also just be like liquidity provisioning in DeFi. As you know, there's different decentralized exchanges like Airdrome, Uniswap, and so on. And you'd be able to actually participate as a liquidity provider or market maker on these exchanges. Right. And doing so actually also offers you an indirect form of yield that effectively helps you grow your assets. So if you were previously holding Bitcoin on Coinbase, you didn't earn yield, you're not able to get a loan, but now you're able to do all of that seamlessly within the app. And one major integration through that was a product that I'm working on to basically offer you loans against your Bitcoin. So it's a kind of full circle when we shipped cbBTC. It was to effectively platformatize all the things that we're building in our roadmap and also support the ecosystem of builders on Base and other blockchains to be able to leverage a more trusted, safe wrapper of Bitcoin on-chain.
I just want to hammer this home even more. When I first saw the announcement that you were going to be providing these BTC-backed loans, I thought it was like one of the biggest things I had seen. I can't remember exactly when it came out, but I thought it was pretty huge news because I still think so. People that have been in DeFi for a while, I think we take for granted borrowing and lending, but it's the primitive that, and I've talked about this probably a lot on this podcast. People probably heard this story a lot, but whenever I show friends borrowing and lending, it still blows their mind that you can essentially be your own bank. So I just want to really kind of hammer home what's actually happening there, because I think being able to hold the assets that you covet and borrow against them is how people have generated wealth for, generations. And now we're finally providing that to digital assets as well. And yes, it's existed on chain, on DeFi, but I think the exposure that people are getting now through this Coinbase front end just exposes it to the masses in such an easier UI UX format, because, we can't kid ourselves. It's not easy for newbies to spin up a wallet and start doing this in pure DeFi land. So I just wanted to kind of hammer that home too. But one other thing I want to ask too, what sort of borrow rates are you seeing? So people, they're sitting in their Bitcoin and then they borrow USDC. What are the rates that people are seeing lately on Coinbase with this product?
Yeah, for sure. And total plus one on the points that you mentioned regarding how people can effectively grow their wealth. This is one of the major reasons why users come to Coinbase to borrow, because they actually see an advantage of having long exposure on their Bitcoin and then unlocking capital. It's almost like buy Bitcoin, borrow until you die is like a common strategy, which is like you can always have an open credit line, allowing you to effectively keep stacking sats whenever possible. So the rates on the product today are variable. So we integrated Morpho's cbBTC USDC lending market on Base. And the way this works today is a variable interest rate loan. So rates are effectively a function of how much liquidity is utilized on the underlying market. And the more it's utilized, the higher the interest rate. And of course, if you're deep in DeFi, that this is some kind of curve, which is a function of utilization. And so far, the market has been in a healthy utilization, also including the lenders in that pool. So we've seen rates range from 5 to 7.5%. The prevailing rate right now is about 7.5%. But we've seen historically, if you do the average across the last few months, it's closer to 6-ish%, which is still almost 2 times, I would say, attractive than other offerings in the market. And you could look at other centralized platforms as well. And we've effectively, through DeFi, been able to offer really attractive interest rates to our borrowers.
One other point I think it's important for us to discuss is, how does the BTC-backed loans on-chain, on Base, through Coinbase, integrated through Morpho, how does this differ from the last cycle era of, borrowing products for Bitcoin? There were a bunch of different folks out there that created platforms. Those platforms since then have shut down, many of which ultimately failed. There's huge differences here to call out. What are those?
Yeah, if you look to some of the previous credit cycles and failures of platforms where borrowers and lenders were affected across the industry, a lot of it is kind of the opaqueness and the lack of understanding of how some of these platforms operate and manage credit risk. And if you look at previous cycles where there's been failures of such platforms, DeFi actually held up super well in terms of like managing flash crashes or liquidation risks. And we've seen this countless times where effectively platforms actually make sure positions are unwound on DeFi before they're able to meet the demands of other creditors on their end. One of the reasons why we actually support on-chain and DeFi for this particular product is because the system is transparent, right? It's not opaque. You can actually see what the exposure of loans are in each market. You can see the risk. You can calculate what the overall, risk is in terms of relative to the market volatility. And the benefit of DeFi is very much so that, the risk is so evident that it's very hard to price in. It's very easy to price in when you actually look into future necessities or how lending will be constructed for even like other platforms like Coinbase integrating it. Given this benefit of transparency and risk management, This is a core differentiator for why we actually build on transparent financial platforms. And this actually benefits not only our users, but also benefits our own internal operations and risk management.
This episode is brought to you by MANTLE, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With ONCHAIN transactions, TradFi rail compatibility, and integrated DeFi features, MANTLE is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow mantle_official on Twitter.
KATANA is an opinionated blockchain. Its opinion is that for DeFi adoption, there are two key things we need: deep liquidity and high yield.
To learn more, go to katana.network. As a DeFi investor, I turn to Maple for permissionless institutional quality yield in a single liquid asset, backed by over-collateralized loans. Maple's SYRUPUSDC and SYRUPUSDT are now supported as collateral for enhanced yields on major DeFi liquidity hubs such as Pendle, Fluid, Camino, Jupiter, Morpho, and soon Aave. To learn more about Maple, go to maple.finance.
So Sid, I think this is a good time to get into the news of the day. Coinbase has launched ETH-Backed loans. What can you share about this new launch, this new product line?
Yeah, that's a good question because we asked ourselves this summer, we've done Bitcoin, we've launched it, we've seen good success. And if you look at the data, we've originated more than 1.2 billion in loans, some of the highest in the industry for consumer-backed loans in crypto. And with all the success that we've seen with that, we realized, obviously, Ethereum is the next biggest asset in terms of what we custody within Coinbase and outside in the industry. Naturally, given all the products that are built in DeFi are all built through Ethereum and EVM and the ecosystem there, we wanted to naturally segue into that. And today we've released Ethereum-backed loans as a second collateral asset that users can borrow against. And we've seen increasing demand from our customers asking us, when can I borrow against my ETH? Like, when will you support ETH so I can actually get more liquidity? And even our users who've been borrowing against Bitcoin have requested the same so they can continue to access more liquidity from their assets. So we're very excited to roll out Ethereum-backed loans, and we expect almost similar levels of traction as Bitcoin, maybe not as high as we saw this year, but definitely to a similar magnitude over the next 3 to 6 months. And of course, the markets are a big function of that, but we were very excited to roll this out to our users.
Sid, can you clarify the collateral that we're borrowing against with these ETH-backed loans on Base? Are we talking about ETH or WETH, or are we talking about the Coinbase LST cbETH?
Yeah, so eventually we're going to have both of those assets. If you're not currently staked on Coinbase, you'd be able to borrow against wrapped Ether or WETH, as you pointed out. If you're already staked on Coinbase and you're earning yield perpetually, you should be able to borrow against that position and against your staked holdings, which is effectively the best way to accumulate more wealth, and that'll be powered by cbETH. Starting today, we're rolling out support for the unstaked wrapped Ether, regular Ether positions, and then we'll soon be rolling out support for borrowing against your staked Ethereum positions as well through cbETH. Super excited to have both of those in the mix, and ultimately we see benefits for each one of those variants, but we're excited to have both of those in the capability for someone to be able to borrow against.
One thing I want to call out too, just with this arrangement, so myself, and I know DeFi Dad, we've been in these kind of borrowing against our asset positions for many years on chain, but it's definitely not lost on me, how scary that can be at times, essentially being your own bank. So I think one of the benefits this offers, and I know there's probably DeFi maximalists out there that are screaming when they hear something like this, but I think there's a lot of peace of mind, honestly, because one thing I even worry about personally is like succession planning. Like, what if something happened to me? Would my wife be able to find my private keys, which is just like, a rat's nest of hidden stuff that no sane person would ever be able to recreate or put together? Luckily, I've told DeFi Dad, and he's told me some things, so we'll help each other out in a pinch. But No, I think what this offers too is just like, a more, I'd say, grown up solution to that. I think there's a place for both. Let's be clear, but I think this appeals to a way broader audience. Again, kind of alluding to what I said earlier, but yeah, maybe speak to some more of the benefits that you see with these arrangements.
Yeah, I think broadly there's like 3 benefits. One is the ease of use, the fact that you don't have to worry about leaving Coinbase, using other platforms, or even understanding the intricacies of DeFi and on-chain. It's almost like you don't have to think about any of that. You still get all the benefits of it in the Coinbase app, but with a very simple user experience. And it does play a huge role as we reach the mass market, right? Within the US or other countries we expand to, user experience is something that we really value, and basically solves a lot of the headaches that people go through, especially when using crypto. The second benefit, of course, is the fact that you get really good economics from this transaction, just because it's a global pool of liquidity and lenders around the world are lending capital. So you effectively get economies of scale because the cost of capital is very attractive. And the cost of capital is very attractive. The demand actually naturally flows to those markets. Thereby, you're effectively being able to create a really strong financial system on these rails. And then the third part is actually all the ancillary services that come with using Coinbase: tax reporting, transaction management, tracking, like basically like all your assets in one place, the convenience of managing your assets and loans and lending activity all within the Coinbase app for easy to access data, right? And by the time the tax year comes, you actually have statements that are issued for you as a user as well. So you have the full suite benefits from user experience, the convenience of having everything in one place, and also the transparent and economics of DeFi for your actual lending activity.
In the past, when I've talked to friends about, opening up a DeFi loan on chain, there's just so much to, give them in terms of instruction, how to set up a wallet, how to on-ramp those funds, where do they get the collateral that they're going to use if they don't already have something like ETH or some sort of tokenized Bitcoin. And so with the BTC-backed loans using cbBTC, that was radical to me because there were so many steps involved in getting one of these wrapped versions of Bitcoin on chain. You had to know how to swap. You had to know how to use something like the REN bridge back in the day. But now that partnership that, a customer has, with Coinbase by using the platform, they have basically the ability then to wrap that Bitcoin themselves and then move it on chain and benefit from these types of services. And everything I just mentioned too is for the folks that were going to do this manually through these products, you're abstracting all of that away. So I still, am an advocate, maybe even a borderline maximalist of being a self-sovereign investor, but I have lived this trying to teach my friends about, using DeFi loans and, creating those on chain and managing them on chain. And at some point you realize not everyone is meant to have all this control. They just want the benefits of it. And I feel like what you're putting out there for the number 1 and the number 2 digital asset in the world, it's a watershed moment for creating more adoption. So one other thing to call out here with cbETH coming eventually, being a yield-bearing version of Ether, I think it's a superior asset in comparison to just holding something like ETH or WETH. This is part of the reason I'm always so bullish on holding a liquid staked version of ETH, let's say, over something like Bitcoin. I'm wondering what other types of collaterals might become available. Like, is there any that are already confirmed, or what can you tease us with?
Doge?
I think our focus has always been sequential thinking, and we want to be consistently iterating on our products. I think the fundamental principle of building good products is to consistently add new features and get product market fit over time. We had Bitcoin, we've done really well with that, and we continue to grow that business. We're doing Ethereum and cbETH as well soon, and totally spot on in the fact that you always want to be earning yield on yield-bearing assets and borrow against them, right? It's probably the best way to accumulate financial wealth as a part of it. We do have other wrapped assets that we've launched in the past, cbXRP for Ripple, cbDoge for Doge. We've had Litecoin, and then we also have Cardano. And effectively, these assets represent a huge market share for how much assets are custodied within Coinbase by our retail customers. And effectively, a function of why we deploy these assets on chain is because we can eventually support them in all of our DeFi mullet offerings. So as part of the collateral expansion, we do plan to consider these assets as well across the ones that I mentioned. And it'll be a step function improvement to what we already have across the products. But it'll be really interesting and exciting for users who hold Ripple or who hold Cardano or Litecoin, because now they can actually access liquidity that they previously couldn't. And it just doesn't stop there. Eventually, in the years coming, hopefully we can offer credit across many more assets, but we're starting first with a few, ranked almost by how much assets are custodied within Coinbase and also outside of Coinbase, that people will naturally bring their assets in order to borrow because of the feature.
One thing that I want to ask too, Sid, so maybe for listeners, you can explain what are the risks if somebody opens one of these loans? Like, what type of security do they have that they know their funds are going to be safe, essentially?
Yeah, definitely. And I think every product comes with its own risks and advantages, especially when you look at lending and borrowing per se. So some of the biggest risks involved, and we're mitigating a lot of that as we integrate these systems, is the smart contract risk. Given that these loans are actually originated on the blockchain, on chain, on Morpho, there's fundamental risk to the exposure of a user interfacing with those smart contracts. The good news is that Coinbase has spent over a year auditing these contracts and reviewing Morpho's 27 plus audits that they've done in the life cycle of their business as the source of sort of guarantee that there's a lot of diligence that has gone into it. But as we know in crypto and DeFi, that risk will always exist. Probably the probabilities might be lower, but that always remains as an exposure that the user is taking when interacting with a decentralized platform through Coinbase. The second exposure is mostly around anything that the app is restricting you to do. During market volatility or during instances where Coinbase's app sometimes has an outage or the services are not working as much, the user might be restricted to actually use the user interface and the access to the product. But those are effectively a function of just the app going down. And we also built ways in which users can also eventually export their embedded wallets onto their own interface, into their own control. So those will also be mitigated over time. But those are the two broad risks involved. And for all the security things that I talked about, we've built really hardened systems both to detect and have strong guarantee of responding to potential vulnerabilities. And we have bug bounties for all of the smart contracts that we've written to support this product. And we also work with a number of law enforcement agencies and compliance agencies to be able to protect users in any scenario where there's a vulnerability or a hack. And hopefully in the future, we have stronger account protection or insurance products that we can build to effectively reduce that smart contract risk. And we're figuring out a number of different ways to do that as we continue building and maturing this product. But yeah, there are definitely risks involved, but we've been very hard at work to mitigate some of those risks and expose our users to the least amount of risk possible.
For all that we're covering in terms of these Bitcoin and ETH-backed loans made available to Coinbase customers, these loans are powered by Base, which is an Ethereum L2. What goes into that thinking? Like, why does Coinbase build on Base and Ethereum L2? And what's the significance of that?
Yeah, so Coinbase's Base is a blockchain that we've built and maintained as an Ethereum rollup. This is effectively where a lot of our builders, both in DeFi and otherwise, can build smart contract-based applications for the world. So effectively, you can imagine Coinbase's exchange today as a custodial product. But for the future of finance, if we want to bring the best tools available to Coinbase in the world, having a blockchain or having an open network where people can build and iterate and create financial utility, that's all possible through this blockchain that we've been building over the last year or so. And ultimately, the way we see it integrate into our core products are the best builders come to Base, and the best apps are built on Base, and the best financial services that we can expose to users are the ones that we can hook onto Base, right? So it's kind of like a circular flywheel of sorts of having Base as the backbone for a lot of our apps that we're building on top of. And we're super excited to continue integrating Base into a lot of our core Coinbase features. And the best part is that you can be a builder anywhere in the world today and deploy your applications on Base. Without the permission of Coinbase, you can just, literally write smart contracts and put up a UI and deploy your app. So we're very excited the fact that there's this whole flywheel, and the way we see it is that we integrate Base into all of our Coinbase products eventually.
River is building a chain abstraction stablecoin system that connects assets, liquidity, and yield across multiple chains. Season 3 is live. Earn River points by using SAT-USD in DeFi such as Pendle, PancakeSwap, and Uniswap. Stake River points to accumulate more or convert points to River tokens whenever you like. To learn more, go to river.inc. Hey folks, I want to tell you about our sponsor Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions. With battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs, Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi.
What sort of uptake has it been on the BTC loan side of things? Just generally curious if you're, excited with the momentum so far. Has it exceeded expectations? Where is this at in your mind of level of success so far, I'd say?
I think an interesting relation is in equity markets, around 20% of assets are usually used for margin, of course, for trading purposes and other types of use cases. Coinbase's Bitcoin-backed loan program has already seen a lot of success. We originated $500 million in loans in the third quarter this year. In aggregate, since fully rolling out in April, we've been able to originate $1.2 billion in loans, just across around 20,000 lifetime users. I'd say most of our traffic has been a lot organic. We've seen a lot of demand from users who are typically high net worth, who have more than $100,000 or more in assets under management on Coinbase. And these users are effectively borrowing an average of $50,000 or more. And if you look at our public dashboards here, it's all on-chain and available, which is the beauty of this. We're actually not lying. We're showing the numbers that are actually publicly traceable. And we've seen a lot of users, high net worth, who have actually been able to borrow even up to $5 million in capital. And we do offer that across the board, which is not typically offered elsewhere. And we do see the success to continue, but right now it's all been organic, and the more partnerships that are coming along the way going to next year, we expect that to almost double or more. And we're super excited to consistently keep growing. With any product, as the product lead, you kind of want to see recurring growth happening consistently. And if you look at the charts, it's almost like more than linear here, and it's actually growing consistently week over week. So we've been able to see a lot of success there. And we're hoping to clock close to $600 million in loan originations in the fourth quarter, so this quarter. And then going to next year, we hope to originate a lot more from there. With Ethereum specifically, it's still to be seen. We do have a lot of assets on the platform that will be used to borrow. Probably not the same magnitude as Bitcoin, but we're very confident that the volume will originate based on the success and adoption of just the Bitcoin product.
Have you been able to do any research or interviews with customers to better understand what are they using those Bitcoin-backed loans for? Is it a personal loan? Is it simply buy more Bitcoin? Anything that you can share?
Yeah, for sure. I think the the product serves a lot of different use cases. And my job at Coinbase is to talk to a lot of our customers. Good or bad feedback, we always want to know why people are using it, how are they using it, and what we can improve. And going into a lot of these customer conversations, we've gathered a lot of insights. So more broadly, one of the main use cases is for investment purposes. So if you're actually investing in real estate, or if you're investing in other asset classes outside of Coinbase, that's a big common theme. And as part of that also are users who are borrowing against their Bitcoin to put down money for their down payments. We've actually seen users who want to take out a loan and not sell their crypto, because traditionally in a mortgage, it's very hard to have your crypto assets being recognized as collateral for it to be underwritten. So a lot of users are even like using this product as an over collateralized loan to funnel into their mortgage as well, and also commercial real estate. Another big part of our users are also using it for refinancing other forms of debt that are higher interest rate or different types of collateral. So if you have a personal loan or a credit card loan that's large in size, people are actually refinancing there for a crypto-backed loan. And we've seen a lot of users who've shared information about how they're refinancing their debt and how they will continue to do so. And the last segment is a lot of lifestyle expenses. For instance, myself, I have a loan open to actually pay off some of my bills so I can keep stacking crypto every month with my paycheck. And a lot of people are in similar camps. They probably borrow when they want to travel or take a large trip with their family. If they have a small expense like wanting to buy a car, or even like using it to finance their everyday spend, that's possible. And if you look at the complementary products we offer at Coinbase, now you have the Coinbase One credit card as well. So it all full circle allows people to even run their lifestyle on these Bitcoin-backed loans. And we probably will see the exact same thing happen with other forms of collateral. But largely, it's like those three use cases. Well, one's for investment purposes, the other is for refinancing debt, and the third is, of course, like around lifestyle expenses. But yeah, we see a whole gamut of things. But as we talk to some of these high net worth customers, a lot of them ultimately care about having these loans open for a long time because they see the upside potential of Bitcoin, and they don't want to sell it effectively to get liquidity.
One of the benefits we might have not called out here is just the fact that there's no payment schedule. You're able to borrow, and this is not the norm in traditional finance. You're able to borrow and basically pay it back as you see fit. Of course, you have to maintain a certain loan to value ratio, but if you've ever opened a loan with someone like SoFi, I've done that over the years. I used one to pay off my student loans many years ago, and that was helpful to me, but I was seeing a debit every single month. I was on a payment schedule. And so it's just so powerful to be holding something that you believe could go up in value over time. For all of us, that's Bitcoin and Ether in this example. And to be able to borrow against that so that you don't have to sell, get yourself some liquidity, and then pay it back as you see fit.
Yeah, for sure. And I think the benefit of having a DeFi loan as well is not having to be locked into a fixed repayment cycle, and you effectively have an open credit line for however long as you want, and the interest accumulates as a result of that. And a lot of users, even the early days of on-chain DeFi capital markets, have loans open on MakerDAO, Aave, Morpho, and other platforms because they see the benefit of holding Ethereum or Bitcoin for the long run. And as you were saying too, like a lot of fixed-term loans or lending activity that we use in the traditional world have those restrictions also tie into being underwritten by your FICO credit score in the US. For opening crypto-backed loans on Coinbase or even DeFi, there's no necessity for having a credit score. It's entirely, you could open it entirely outside of the realm of the traditional financial systems. There's no overlay into your paychecks or any credit risk methodology needed for opening the loan itself. Is purely based on the amount of collateral you post and also the LTV, loan to value ratios you maintain on the loan itself.
Yeah, what you just said and what you were speaking to earlier, I think is what people in crypto have been sort of demanding. Just basically them saying, hey, look, I have some wealth in this asset that I believe in, but it's not being recognized by any institution, any bank, and they're not letting me leverage this wealth to further benefit my my own life, right? So I think you're just tapping into a ton of latent demand here for this that's been sorely needed. And this kind of brings me to a tweet that I saw you post. Let me just read it here. So you say, wait till you see on-chain lending power, mortgages, debit, credit card networks, tokenized equities, life insurance, structured products, unsecured loans, payday loans, corporate financing, all using BTC and ETH as programmable reserve assets. Can you speak to that a little bit more? Because I believe that, we're kind of on the cusp of unlocking a lot of power as well with these assets and what they can do. But yeah, we'd just love to kind of your fleshed out thinking on, what maybe caused you to write that tweet and kind of your deeper thinking behind it.
Yeah, I mean, I've been in DeFi for the last 8-9 years, and I've seen the wave of adoption of all these products and companies that are built on on-chain rails. Part of this tweet inspired mostly from my personal point of view. None of it reflects our Coinbase roadmap for these specific use cases, but of course, I'm beating the drum on all those and talking to builders about these. One of the main unlocks for on-chain capital markets is the fact that you have programmable smart contracts, and you have different agents that are involved in these smart contracts as well that can effectively facilitate different types of financial activity. As we see crypto, I would say, bridge more into fintech and fintech bridge more into on-chain, you'll start to see a lot of like centralized and decentralized projects working hand in hand. And one of the biggest unlocks of having transparent credit and basically assets that are available to trade 24/7 and liquid, you can effectively create packaged products or interesting mixes of products, even as we start to think about stuff like mortgages, right? Because we now have Fannie Mae and Freddie regulations that actually starts to recognize crypto as collateral, and effectively you can lend against those assets. You can even see companies that are operating with Bitcoin and life insurance sectors as well, where the premiums are paid in Bitcoin and earned in Bitcoin. So these are effectively ways in which the industry is already going. Part of it will be enabled on-chain, part of it will be enabled by Web2 products, but they're going to slowly commingle and intersect together. And I think we're seeing a lot of innovation there, even on the unsecured credit side of how to even bridge credit scores on-chain and use technology that can actually help smart contracts read that data off-chain as well. This is mostly just a personal view here. I'm very optimistic that DeFi is the future financial platform that everyone will build on. And similar to how stablecoins have now emerged as every platform that a fintech will use, DeFi will be the platform after which stablecoins will start to get integrated and other credit and financial use cases that will be built on it.
So Sid, I'm a Coinbase investor. I hold coin, and something I think about is like, okay, what is this company going to look like in the next few years? And I, of course, have my ideas. I mean, I think the term, financial super app is being thrown around a ton these days. We're talking a lot about neobanks lately, with stable coins coming even more to the forefront. So yeah, I'm curious what you think Coinbase is going to look like in, say, the next 5, maybe 10 years, something like that. What do you think it looks like over that time frame?
Yeah, for sure. And I mean, I can give you my personal view, but also mainly the company view here as well. We're currently moving to a direction where we want to be that financial super app, as you pointed out. We're internally calling that the Everything Exchange, where you can pretty much access any product that you want to trade, invest, and also hold for the long run. So we're going to be able to offer that full suite of financial services and markets that you can trade on. And that is the direction where we see Coinbase going, and effectively being the global financial platform that anything that you want to trade or invest or use for your daily life can be conducted on the product. I think 5 to 10 years from now, I just imagine me doing all my activity on Coinbase, right? If I want to get paid from my company, I get paid at the Coinbase. If I want to actually save in my savings account, I can earn yield on my stable coins. If I want to spend, I can either use my on-chain or credit card or open a crypto-backed loan. If I want to actually open a mortgage, I could do it all on platform. My personal view is that I would just wake up 5 to 10 years from now, even sooner, where I just open the Coinbase app and I can pretty much access entire financial utility for everything that I want to do. And we will probably get there, right? We're going to have to work hard on building those suite of products, connecting them really well. But given our talent, we have some of the best talent in the world in crypto, and also the direction of the regulatory regime and all the focus that we've had and investments that we've made over the past years will enable us to be the financial hub and institution that, a billion plus people will start to leverage and trust. And I think the direction of where we're going in the 5 to 10 years, there's going to be a lot that's going to happen, and super excited to be and build with you guys in this journey.
Guys, I think this is a great place for us to start to wrap up. So first, I want to remind our listeners they can learn more about the new ETH-backed loans by Coinbase by going to coinbase.com/borrow. They can open the Coinbase mobile app. There is a little tab that says borrow on there as well. Best place to check it out. You can follow Coinbase on X or Twitter, and then follow Sid's personal account at SidRMSH. Sid, so great to be able to talk through all of the exciting developments here with this new product. Keep up the great work, and I want to give you the final word before we go.
Yeah, thank you. This is a great conversation, and I think it sets the stage for what's possible with DeFi, and I hope the listeners understand that Coinbase really is looking forward to bringing more on-chain technology into our platform, and I'm very open to all feedback with our borrowing product. If you're a user or not a user, thinking of using it or have issues with it, you can find me on Twitter and send me a note. More than happy to assist and share your comments internally as well. But thank you, DeFi Dad and Matic, for having me. Looking forward to many more of those, and excited to keep jamming with y'all.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.